At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Assalamualaikum warahmatullahi wabarakatuh. Ramadan Kareem to everyone in this session today. I am S. Fatima Inki from Halal Development Corporation Berhad, and we are here today to bring you Invest Shariah Industry Dialogue 2022 Series 1. This event is proudly brought to you by Bursa Malaysia in partnership with Securities Commission Malaysia and Halal Development Corporation Berhad. Themed Empowering the Halal Industry in the Islamic Capital Market, this first series will focus on building awareness among companies in the halal industry on the value proposition of raising funds via the capital market through listing on Bursa Malaysia, as well as the opportunities for being listed as Shariah-compliant PLCs. For today's session, we will start with the welcome remarks by Encik Azhar Muhammad Zabidi, Director of Origination and Listing Bursa Malaysia, and followed by a panel discussion on Sharia compliance status, the impact and opportunities for companies listed on Bursa Malaysia by our distinguished industry experts, moderated by Encik Ainul Azman Ainul Jamal, Chief Financial Officer, Halal Development Corporation. At 3:45 p.m., we will be enlightened with a presentation on introduction to the listing process on Bursa Malaysia, and we will end our session today with a closing remarks by Encik Hairul Arifin Sahari, Chief Executive Officer, Halal Development Corporation Berhad. Before I begin, I am happy to remind the participants that there will be Q&A session after the panel discussion and presentation. You will see a Q&A box at the bottom where you can submit your questions for the speakers anytime during our live. Without further ado, let us start this session with a welcome remarks by Encik Azhar Muhammad Zabidi, Director of Origination and Listing, Bursa Malaysia. Encik Azhar.
Terima kasih. Bismillahirrahmanirrahim. Yang berbahagia Encik Hairul Arifin Sahari, Chief Executive Officer, Halal Development Corporation Berhad, distinguished panel speakers, distinguished guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon. It is my absolute
Hello everyone, I think there's an internet connection problem there. While we are waiting for Encik Azhar, I think I would like to brief a bit about our moderator and as well as our speaker's background. Okay, for our panel session later will be moderated by Encik Ainul Azman Ainul Jamal, the Chief Financial Officer, Halal Development Corporation Berhad. Encik Ainul Azman is the Chief Financial Officer of HDC, an agency under the purview of the Ministry of International Trade and Industry Malaysia, MITI, established to serve as a custodian of Malaysia's halal economy and to spearhead the development of Malaysia's integrated and comprehensive halal ecosystem and infrastructure. He is a fellow of the Association of Chartered Certified Accountants and a member of the Malaysian Institute of Accountants. His career spans more than 25 years, which include the audit, banking, power, and property development industries. He will be joined by our panelist, Professor Dr. Ashraf Mohamad Hashim, Chairman of Sharia Committee, Bursa Malaysia. Encik Rizham Zaidi Rizwan, Deputy General Manager, Islamic Capital Market Development, Securities Commission Malaysia, and Encik Muhammad Damshal Awang Damit, Executive Director Investment, Lembaga Tabung Haji. A brief background on our notable panelist, Professor Dr. Ashraf Mohamad Hashim is the Chief Executive Officer of ISRA Consulting. He is also a professor at International Center of Education in Islamic Finance, INSIF. Dr. Ashraf currently sits on the Central Bank of Malaysia's Sharia Advisory Council as Deputy Chairman and the Securities Commission of Malaysia's Sharia Advisory Council. He is also a member of Sharia Committee for International Islamic Liquidity Management Cooperation and the Chairman of Sharia Committee, Bursa Malaysia. He is actively involved in the many consultancies works related to Islamic finance abroad. Among others, member of Sharia Board for Abu Dhabi Islamic Bank, ADIB, in the United Arab Emirates, the Islamic Bank of Australia project, Nur Takaful Nigeria as the Chairman of Advisory Council of Experts, IMON International, Tajikistan, and a few REIT companies, particularly in Singapore. While Encik Rizham is presently a Deputy General Manager for Islamic Capital Market Development, working on strategy, industry insights, and analytics, vital to the broadening and deepening of new areas in the Securities Commission's Islamic capital markets in Malaysia. With more than 15 years of experience, Rizham's knowledge in the financial services industry includes his stints as an equity analyst covering both the buy and sell side, and as a fund manager, handling varied portfolios in Islamic equity, exchange-traded funds, Islamic equity private mandates, and the Islamic money market fund. Encik Muhammad Damshal joined Lembaga Tabung Haji in January 2020. Currently, he is the Executive Director Investment, responsible for managing the company's investment portfolio. He has held senior roles in investment management companies. From 2016 to 2020, He held investment management roles in social security organization known as Bursa Malaysia. He was a partner and CEO at Azimuth Global Partner just before Bursa. He headed private equity department at Fulda Investment Corporation in 2015. At ACA Armani, which is an associate of Sumitomo, he spearheaded it as CEO from 2012 until 2015. He was a managing director of M&D Asset Management, previously known as Credit Agricole Asset Management, from 2009 until 2012, where he managed global Islamic fund management and business development. Before I proceed with this, I would like to invite Encik Azhar for his speech. Welcome, Encik Azhar.
Thank you very much. I'm not entirely sure where I got lost, but let me just continue from where I believe I lost or had technical problems. Okay, I would also like to take this opportunity to thank Halal Development Corporation for co-organizing this event, the first in this year's series of Invest Shariah Industry Dialogue. While we are still not able to convene physically, looking at our list of speakers and panelists, rest assured, we have put together an exceptional group of highly regarded industry leaders and subject matter experts, each of whom will provide you with in-depth perspective on today's topics of conversation, inshallah. Ladies and gentlemen, despite market volatility that resulted from the global COVID-19 pandemic, the Malaysian stock market demonstrated immense resilience throughout 2021. The second year that we here in Malaysia, together with other nations around the world, had to continue to endure with the pandemic. Last year, the exchange saw a resurgence in the number of initial public offerings, or IPOs. We witnessed 30 new listings comprising 7 main market listings, 11 ACE market listings, and 12 lead market listings. The listings raised a total of 2.7 billion ringgit and contributed an additional 10.6 billion ringgit of market capitalization, which last year stood at 1.8 trillion ringgit. The securities market average daily traded value stood at 3.55 billion ringgit, reflecting the confidence investors continue to see in our market despite the uncertainties. Although overall net foreign outflows recorded in 2021 was a negative 3.15 billion ringgit, but as many of you would have followed, we began to see foreign inflows to our market from around July, August of last year. And this has continued into 2022. And moving into 2022, the securities market continues to show resilient performance. And up to just March of this year, average daily trading value stood at 2.6 billion ringgit, still well above pre-COVID levels. But perhaps more importantly, we have seen net foreign inflow of some 6.4 billion ringgit as at end of March. As for IPOs this year, we have already witnessed 6 new listings since just this year alone, including 2 main market listings, Sen Heng and Farm Fresh. Out of the 6, 4 of the listings are Shariah-compliant stocks, and these listings contributed to 5.3 billion ringgit of additional market capitalization. And we expect to see 2 more listings just within April this month alone. Again, these numbers clearly reflect the level of confidence and positive sentiment investors have in our market and our economy overall, especially as we chart our course toward achieving economic recovery and a return to normalcy. In the global Islamic capital market segment specifically, we are proud to be a globally recognized leader in Sharia listings and investments, and we have been recognized for many achievements. Notable among them is that Bursa Malaysia was again named Best Stock Exchange for Islamic Listings by Islamic Finance News at the recent IFN Awards, and this is the 4th consecutive year we have won in this category namely since 2018, 2019, 2020, and now 2021. Bursa Malaysia the exchange's end-to-end Sharia-compliant investing platform, is supported by 16 Islamic brokers and provides both faith and ethically based investors with access to a broad range of opportunities in our marketplace. Allow me to share some of the key highlights of the Sharia-compliant equity market as at March of this year. 755 out of the 952 listed companies, that's roughly 79% of the listed entities on Bursa, are Sharia compliant. Sharia market capitalization stood at 1.2 trillion ringgit and made up 67% of total market value or market capitalization of 1.8 trillion ringgit. The average daily trading value of Sharia compliant securities traded on the exchange was 1.9 billion ringgit, that's per day, and made up 75% of overall average daily trading value of 2.6 billion ringgit. So we continue to observe that our Sharia indices have consistently outperformed its conventional counterparts over the last 10 years. For example, the FTSE Bursa Malaysia Hijrah Sharia Index, comprising 30 largest Sharia-compliant companies on the FTSE Bursa Malaysia Emas Index, have consistently outperformed the FBM PLCI, growing about 23% between 2011 to 2021. These are just some of the key indicators that clearly demonstrate that the value and overall performance of Sharia-compliant investments and what it has to offer to investors. Now, last year, in July 2021, we launched the FTSE for Good Bursa Malaysia Sharia Index to meet the financial community's sustainable and Sharia-compliant investment needs. This new themed index is designed to track constituents in the FTSE for Good Bursa Malaysia Index that are Sharia-compliant. The FTSE for Good Bursa Malaysia Sharia Index currently comprises 57 constituents, that's 57 companies, and will serve as a basis for fund managers to develop new investment products comprising a portfolio of Sharia-compliant equities guided by sustainable investing principles. Ladies and gentlemen, there is so much potential and opportunity to grow Sharia investing due to the profound similarities that we share between Sharia investing and socially responsible investing or ethical investing. These methods or preferences in the way investors invest today help to promote and encourage more ethical, responsible, and transparent practices. So the convergence of these approaches will today and in future continue to spark interest among investors who are concerned about societal and environmental issues. This will lead to an increase in sustainable and ESG investment across the diverse pool of Islamic finance asset classes, resulting in overall financial industry growth. The potential for the Islamic capital market and Sharia investing remains promising, and the Malaysian Islamic funds industry has grown tremendously with the Islamic fund size of 219 billion ringgit, representing 23.2% of total global Islamic fund size of 942 billion ringgit. That's only 62 billion ringgit shy of a trillion ringgit, a very achievable target within this next 1 or 2 years. In addition, we continue to see a rising trend of Sharia-compliant initial public offerings, IPOs, in the Malaysian IPO landscape. From 2016 to 2021, just a space of 5 years, Sharia-compliant IPOs contributed 69%, or 10.7 billion ringgit out of the 15.5 billion ringgit raised from 124 IPOs during the period. During the same time, Sharia-compliant IPOs also achieved a higher oversubscription rate overall, ranging from 11 to 70 times oversubscription versus 6 to 51 times among the non-Sharia compliant IPOs. And in terms of first day premiums, that's the price increase on the first day of trade, Shariah-compliant IPOs achieved 17% to 51% premium compared to non-Shariah-compliant IPOs, which only achieved 4% to 23% premium. This data suggests that Shariah-compliant IPOs attracts interest and has a stronger demand for investors. And companies that are Sharia compliant are better positioned to attract a broader investor base, as such companies are able to cast a wider net and hence reach a broader audience of potential investors. Sharia compliant securities can also provide for diversity in terms of benefits, and I'm referring to specifically the fixed income debt segment. This meets with a wider range of investing objectives, as well as offers a safe haven for investors, especially during times of crisis. Ladies and gentlemen, Bursa Malaysia will continue to build on its strengths as a growth catalyst in the Islamic capital market. This will help to enhance the appeal of Sharia-compliant companies in Malaysia and strengthen our Malaysian Islamic finance industry at the global stage. We will continue to intensify efforts to identify emerging sustainability-driven opportunities in our suite of products and services, and in further promoting the Sharia investing agenda through collaborations with market participants and intermediaries. So do keep a lookout for more events such as this dedicated to this segment. Now, before I conclude, allow me to thank our Invest Shariah Industry Dialogue co-organizer, Halal Development Corporation Berhad, on their ongoing efforts toward educating the public on Sharia investing. More importantly, perhaps, I would like to thank all of you out there for tuning in today to participate in this event. And on that note, I wish everyone a very productive and impactful day today. Thank you, and wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Thank you.
Thank you, Encik Azhar, for the insightful speech. Okay, before we proceed with our next session, I would like to introduce again our panel here. So we have, the first one is Professor Dr. Ashraf Muhammad Hashim, the Chairman of Shariah Committee, Bursa Malaysia. And the next one is Encik Izham Zaidi Rizwan, as a Deputy General Manager, Islamic Capital Market Development, Securities Commission Malaysia, and Encik Muhammad Damshal Awang Dami, Executive Director Investment, Lembaga Tabung Haji. And Encik Ain Azman, which is the Chief Financial Officer of PHDC, will be moderated our session. So with this, we will now proceed with the panel session moderated by Encik Ainul. Over to you, Encik Ainul.
Thank you, Fatima. Bismillahirrahmanirrahim. Assalamualaikum and good afternoon to everyone. Thank you, Encik Azhar, for the welcoming remarks. You have joining us today for the Invest Shariah Industry Dialogue Series 2022, co-organized by Bursa Malaysia, Securities, Commission Malaysia, and HDC. My name is Ainul Azman. Today, I'll be moderating the Series 1 session titled Empowering the Halal Industry in the Islamic Capital Market. We'll be focusing on informing the companies in the halal industry on the value proposition of raising funds in the capital market through listing on Bursa Malaysia, as well as opportunities for being listed as Shariah-compliant PLCs. We are joined by a panel of 3 distinguished guests, and I'm very excited to have everyone join us today. I'll be moderating a 45 minutes discussion on the topic today, and we will make time for 10 minutes Q&A session at the end, where the panelists will take turns answering questions posed by members of the audience. Let me start with Encik Rizham. Encik Rizham, could you share with us on the Sharia screening methodology, and perhaps you can share with us what are the challenges in implementing the screening process? Encik Rizham.
Bismillahirrahmanirrahim. Thank you, Encik Ainul Azman. Assalamualaikum to my fellow panelists, Professor Dr. Ashraf, Encik Muhammad Damshal. I think to kickstart, since the moderator has invited me to, to say the first word, probably to start off our discussion, it would be good if we can put and show some slides and put into context in terms of what the Islamic capital market all about, and focusing on Sharia compliant securities. So if I can have my slide be projected. Okay, I try to take between probably 10 minutes for the presentation. I have divided my presentation to 3 parts. First, the relevant statistic, just to provide or to kick off our discussion, and also to provide some context to our discussion. Secondly, provide some brief on the Sharia screening methodology. And number 3, I also want to take this opportunity to also talk about, probably brief about Sharia screening assessment toolkit for the unlisted MSME. So if I can go to the next slide, if I may. Okay, if we look at the size of ICM in Malaysia, okay, why this is related to our discussion today? If we look at the size of ICM, Islamic Capital Market in Malaysia today, Islamic Capital Market contribute or consists of 65% of total capital market in Malaysia. And one of the main component of Islamic Capital Market is Sharia compliant securities. If you look at market capitalization of Sharia compliant securities, is about 1.2 trillion ringgit, makes up about 52% of total size of Islamic capital market, which is about 2.3 trillion ringgit. And the size of Islamic capital market for the last 10 years, from 2011 to 2021, has been growing at the compounded annual growth rate of 7.2%, has been growing for the past 10 years. If I can go to the next slide. If we look at this slide, a bit more detail in terms of Sharia compliant securities. As at end 2021, Sharia compliant securities makes up about 79%, or 750 numbers of Sharia compliant securities from the 949 of the total securities listed on Bursa Malaysia. And you can see that it makes up about 79%, which is give a high number of percentage, which is Sharia compliant securities as compared to the total securities listed on Bursa Malaysia. And by looking at this, you can see from the total numbers, we have the breakdowns by sector for Sharia compliant securities, and you can see that industrial product and services make up the most numbers of Sharia compliant securities, followed by consumer product and services, property, and so on. And I just want to relate why the Sharia compliant securities is actually important to the development of Islamic capital market. If I can go to the next slide. While when we look at the first slide, when I talk about Islamic capital market, the main component of calculation of Islamic capital market is Sharia compliant securities and the fixed income market, which is mainly the sukuk market. So these two makes up or are the main component of Islamic capital market. But another industry that is also important for Islamic capital market is the Islamic fund management industry. I just want to relate back to why Sharia compliant securities is important to development of Islamic capital market, and especially focusing on Islamic fund management industry. You can see with various options for fund managers to invest and to structure investment product. So you can see we have quite a number of investment product out there in the market that you can actually invest into. If you look at Islamic AUM, we are currently at 224.8 billion ringgit, which if we look at the trend for the past 10 years, it has been growing at CAGR of 13.4% for the 10 years period. So this is the foundation of the development of the industry for Islamic fund management industry is actually when we have universe of investable universe of securities that fund manager can invest to. Due to the breadth and depth of our Islamic equity market, as well as the sukuk market, you can see that our total of Islamic collective investment scheme is at 386 in terms of numbers, while in terms of asset under management of Islamic CIS is about 158 billion ringgit, which is quite sizable if you compare to other jurisdiction which is also doing Islamic finance or Islamic capital market. So if I can move on to the next slide. Thank you. So that actually I just want to set context why Sharia compliant securities is important to Islamic capital market. And if you look at the Sharia screening, the background from developmental perspective, the key initiative that has allowed this to happen was when we established our Sharia Advisory Council, which is back in 1996. Following that, we launched the first Sharia compliant list in 1997. And as you can see from my slide, I don't want to go into, you can read from the slide. I think the main one, we issue the list twice a year, which is in May and also in November. If I can go to the next slide. Okay, I don't want to touch detail into the calculation, but the Sharia screening methodology for the listed companies, if you look at the methodology, there are three important aspects of the methodology, which is business activity benchmark. Then we have the financial ratio benchmark. Then we have the qualitative aspect. So from this methodology, so we can calculate whether PLC that listed in Bursa Malaysia is Sharia compliant or not. So this we've been using this methodology as I mentioned since 1997, but I just want to to mention also here that in 2013 we have revised before we do the revision of the methodology. We don't have that financial ratio aspect. We only have that business activity benchmark. So that's one of the key difference between following the revision of the methodology. If I can go to the next slide. I just want to touch a bit in terms of the review process internally, how we do or how we conduct the review. Typically, we will extract the relevant financial information. I think the key word here is actually from audited financial report. So we only use the relevant financial information from the audited financial report. Then, from the data, we identify the contribution from non-permissible activities, as you can see from the earlier slide, where we clearly set the benchmark according to the business activity and so on to the ratio. And we compare, of course, the contribution from non-Sharia compliant activity with the established benchmark. Then internally, we do that, then we present to Sharia Advisory Council of SAC for final consideration and for their decision before we compile and make it in a booklet where we publish twice a year, which is in May and November. From this booklet, you can see all the list of Sharia compliant securities. So if I can go to the next slide. So what I just mentioned, I touch a bit on the statistic on Islamic capital market, on how Sharia compliant stock or Sharia compliant securities has helped the development of Islamic capital market, as well as the development of Islamic fund management industry. And we know for the fact that Sharia screening is actually for PLC that listed on Bursa Malaysia. But if we look at why this is also relevant to our discussion today, I just want to mention that the funding stages in the capital market is actually is not only looking at listing market or at the later stage or at the mature stage where company tend to list their companies. When we look at the funding stages in capital market, we know there are also a segment where it involves the unlisted companies who also aspire at some point to be listed on Bursa Malaysia. So this is where we recently, probably not so recent, is last year. If I can go to the next slide. We launched this initiative where this is for the unlisted market, the Sharia Screening Assessment Toolkit for the unlisted MSMEs, where we the intention is for the toolkit to provide guidance in screening the Sharia status of unlisted MSMEs. We know that for the listed one, you don't need to do anything. You can just look at the on board or Bursa Malaysia. You know the status of the PLC, where at the back end we are actually doing the screening, but we are also try to to create awareness among the unlisted MSMEs, where if you want to sort of know the status of your company, whether it's Sharia compliant or not. So this is where we provide guidance, but this of course is self-assessment, and the primary objective, and we launched this toolkit, is actually mainly for Sharia status of unlisted MSME, screening the Sharia status of unlisted MSME, mainly for the equity crowdfunding and also peer-to-peer financing platform, and also for their Sharia advisor to use the toolkit. if you can imagine, you may ask, so what's the difference between the methodology of PLC and the toolkit? The difference is actually, the significant difference is actually at the financial ratio benchmark, where at the debt over total asset we use less than 49% of benchmark, higher benchmark for the MSMEs for a certain period of time. This the intention is actually for us to create awareness that for the MSMEs to get familiarization in terms of the screening process that we also have in PLC. So if I can, I don't want, probably it's best for me to, you know, to show you, to share you the videos, the short videos that we have during the launch of this toolkit last year. So I will share that video. Hopefully it works. Then we can discuss further and take Q&A from the panel, from the audience. Yeah, thank you.
The Malaysian capital market plays an important role in financing the nation's economy and growth. The Islamic Capital Market garners more than 60% of the total capital market. Micro, small and medium enterprises, MSMEs, contribute more than 1/3 to the local gross domestic product. Recognizing this potential, the SC has facilitated the development of equity crowdfunding and peer-to-peer financing frameworks, which have seen progressive growth. In 2020, ECF fundraising grew by 457% to almost 128 million ringgit and has so far benefited 150 MSMEs, while P2P financing registered a 20% growth of 503 million ringgit in the same year, benefiting 2,801 MSMEs. To further enhance the ecosystem for Sharia-compliant fundraising activities, the SC is introducing the Sharia Screening Assessment Toolkit for unlisted MSMEs. It aims to provide guidance in screening the Sharia status of MSMEs, broadening Sharia-compliant offerings and promotes end-to-end Sharia-compliant businesses. The toolkit includes a series of assessment questions based on the Sharia screening methodology for MSMEs, as endorsed by the SC's Sharia Advisory Council. This toolkit will benefit various stakeholders, and this initiative is part of the SC's efforts to promote the development of MSMEs in the halal economy through the Islamic Capital Market.
Yep, that's about it. Thank you, Channel. Back to you. I apologize if it took more than 10 minutes.
Thank you, Encik Rizam. That was a very illuminating information on the Sharia screening methodology and the toolkit. We have among our audiences not just participants from the PLC, but the MSMEs from various parts of Malaysia and outside of Malaysia. Quite a number of them are members of the Halal ecosystem and members registered with the Halal integrated platform. If I can now turn to Professor Dr. Ashraf. Prof, you sit on quite a number of Sharia committees and Sharia advisory councils. Could you share with us, perhaps on your experiences relating to your position in these committees and
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you, Cik Ainul. My fellow panelists, Cik Rizam, Cik Muhammad Damshal, and the audience, ladies and gentlemen. Thank you for the question. I think I will take sometimes most of the things that have been clarified by Cik Rizam before. My first point is that on the establishment of the Shariah Advisory Council of the Securities Commission. Yeah, it has been established under the purview of the Capital Market and Services Act, Clause 316A to be more specific. This has been established under the Act, and therefore the resolution of the Shariah Advisory Council of the Securities Commission, they are regarded as good as law. Yeah, and therefore my members of the audience, it will give Sharia stability. Yeah, this is very important because if you are aware, in many issues we have sometimes we have different views and opinions, but once the views and opinion has been adopted, any views and opinion have been adopted by the Shariah Advisory Council of the Securities Commission, then it became a law, then everybody bound to that decision. And therefore, this is very important because in some other countries, some people will argue on Sharia matters, and in some other environment, the playing field is not the same. Because some institution will say that according to us, we have this view, and according to the counterparty, they have different view. So in Malaysia, Alhamdulillah, I think both in capital market sector and also in banking sector, we have Shariah Advisory Council that have this status where it will give stability in terms of Sharia matters. That is number one. And number two, I would like to extend a bit on the screening criteria that has been clarified by Cik Rizam earlier. That screening criteria is very important because once you are in the list of Sharia compliant list, your investors will be wider. You will have more investors. I think Cik Damsha will share from investors' perspective. That will be one. What I would like to share with you also that this criteria is for investors usage. Some of us, maybe we have a lot of entrepreneurs here. Some of you might Muslim entrepreneurs. Please do not take this criteria wrongly, that once you are listed, you are Sharia compliant 100%. But this is from investors' point of view, where investors normally, when they purchase or when they invest in stocks, they do not have control over the company. So we have all this guideline to make sure that you invest in the Sharia compliant company. But if you own the the establishment, the institution, if you own the business, then your responsibility to make sure that you are fully A to Z Sharia compliant will be more than just the screening criteria. So I think if that is alhamdulillah, yeah. So because just to make an example, one grocery shop owner, he said that according to the criteria, I can have a 5% leeway for me to be involved in Sharia non-compliant activities. So I'm Muslim, I own the grocery shop. Now I would like to sell all halal product, and I will sell a liquor also, but I want to make sure that my liquor will not cross that 5% threshold. So I said to him, you think it is wrong to do that. Of course, if you are Muslim and you want to make sure you are 100% halal, then you cannot do that because you are the owner. You have control over your grocery shop. But for those who want to invest in your grocery shop, of course, this is the criteria that we are using because we cannot control the business. That is number two. And number three, I think I would like to share my experience being quite sometimes in Shariah Advisory Council of Securities Commission. Every meeting we have monthly meeting. And each month, our secretariat will present to us the list of companies that will be that they have calculated according to criteria and will be listed as Sharia compliant or will be out from Sharia compliant list. So what I would like to advise that I see through my, I think 8 or 9 years experiences in SAC of AC, there are companies who are in and out not by design, but only by luck or by I mean they don't care they are in or out. Sometimes they are out because of certain I mean our activities criteria is 5% threshold. They are out because they are beyond 5% just by 5.5%, for example, 6%. And also our criteria on the financial ratio, not more than 33% of their funding coming from Sharia non-compliant funding. Sometimes they cross the line of 33% by certain percentage only. So I think we have entrepreneur here. If you are going to list your company and you want to make sure that you are a Sharia compliant company, please put your just a small effort to make sure that you are always in the list. Yeah, you are always in the list, and that will make your company a good company from Sharia investors perspective. Because we are in Malaysia. Talking about the financial ratio, we are in dual banking system. If you want to take financing, you always have Islamic finance, you have conventional, and both of them are offered by the same institution. So it is not very difficult for you to maintain your Sharia compliant status. So you can have your, I mean, just put some emphasis on this. Not just you are in by luck or you are out by luck, but you need to design and put a little bit effort. Your CFO, for example, need to understand the screening criteria, and therefore he can do some work to advise your company so that to make sure that your company always be in the Sharia compliant list. Otherwise, for example, Tabung Haji Invest, Encik Damsyal, then if you are out from the list, it's quite difficult for us to maintain that stock. Yeah, so I think that's what I would like to share. Maybe in the next round, if we have time, I would like to compare also between the Sharia compliant investing and also the ESG, so and so forth. But I stop here. Chaino, thank you very much.
Thank you very much, Prof. I would just like to remind members of the audience, feel free to pose any questions you may have for members of the panel. And for now, I would like to turn to Encik Damsyal. Perhaps, Encik Damsyal, you can share with us from institutional investor perspective, what do investors seek for in terms of quality of underlying assets, risk appetite, yield, short term, long term, for example, from the Islamic Capital Market?
Assalamualaikum warahmatullahi wabarakatuh. Thank you, Encik Zano, for the question. Thank you, Bursa, for the invitation. Okay, if I can break the question into three, looking from one is from the entrepreneur's perspective, second from the fund management's perspective themselves, like myself, institute, and maybe overall more top-down economic or even the country or economy perspective, very broad. So the first one, I think most of you are entrepreneurs here, as mentioned by Dr. Ashraf. If you look into the impact and opportunities for companies listed, if your companies are listed, the first one, as mentioned by Professor Ashraf, your company will have more coverage. As a fund manager, when we buy, we will be stand guided by the research. We have our research analysts. So if you have more coverage, we can access your company better in terms of fundamentals, in terms of prospects, in terms of risk. So when we have more coverage, and then later If you want to do more fundraising, it will be better because the awareness of your company is there. So that's one. Second, because you have more liquidity into market. I think the same justification number one, because as you have more coverage, because both Islamic and conventional can buy, so you have more liquidity. With this more liquidity, your stakeholders are more diversified, more market participant into your companies. In fact, Encik Hazar just mentioned just now, I think more than 75% of the trading volume is Islamic, right? So more liquidity is good for you. I think indirectly as well, it can even reduce the cost of financing because of the liquidity. And not just on equity, even if you issue sukuk, if you have a lot of good liquidity, your sukuk financing cost from sukuk can even be lower because technical term, we said the spread is lower because of the liquidity. So that's an advantage there. So that's from investors' perspective, the entrepreneur's perspective. But from investors' perspective, like Tabung Haji, with this Sharia listing, in fact, it can provide good profiling, reputation or image to your company. If let's say Tabung Haji is the cornerstone investors. For example, lately, I mean, there's one milk company, Halal milk company, just being listed in Bursa Malaysia, and Tabung Haji become one of the cornerstone. And Tabung Haji, behind it, we have 8 million depositors, more than 8 million depositors. So it provides good profiling. Immediately, we give a good exposure to our 8 billion depositors. So it's a good profiling, we can value add. So you see us a partner rather than just mere investors. Yeah? So, okay, so that is on the reputation. Second, I would say from the fund manager's perspective, Encik Rizwan mentioned that fund managers, Islamic fund managers now is an important component of the Islamic capital market. So here with the involvement of the fund manager in your companies, I think we give more investors awareness to your stocks, as there is what do you call it, more exposure because the investors will have more, what do you call it, engagement to your company. Okay, that is from the investor's perspective. The other thing is, the last one, the other thing that I want to touch is on the comment or the development that is being shared by Professor Ashraf, that he mentioned about Sharia stability. I think this is a good development from investors' perspective. When we invest in your company and the Sharia stability become a law, it gives a confidence from the investor perspective to your company, to the system, to the Sharia environment, because there is a protection to the investors. Sometimes some, can I say, naughty entrepreneurs, say they're using the Sharia interpretation as something that negatively. For example, when they issue sukuk, for example, they're using it as something to be against the investor for not paying the coupon and so on, not because the mismanagement. So they turn into Sharia rather than the mismanagement of the company. This is not good. But I'm glad to see that there's a development on Sharia stability that could provide protection to the investors. The second, I think, Professor Ashraf, perhaps from investors' perspective, we also may be looking at, hopefully there's a Sharia assessment stability. For example, the Sharia status of a company sometimes become Islamic, some become non-Islamic, not because of the change of their fundamentals, but because of the denominator of their assessment. For example, under MSCI, for example, there are two types of assessment. One is on total assets, which is what they call it, the nominal values of the capital, and one is on the market capitalization, where it can go up and down. So during the crisis, last 2 years, COVID crisis, we see that there are a lot of volatility on the Sharia status, not because the fundamental of the stocks or the companies change, not because of the Sharia status or Sharia principal status of the company change, but because the denominator change. Because one is using market capitalization. So when the market capitalization go down, the debt over equity leverage goes up. But other things remain the change. So if we can look into these matters, Sharia assessment stability. So from investor perspective, that would be wonderful. So the last one, I look into more top-down perspective. Okay, for some of the entrepreneurs, most of you, maybe some of you are non-Muslim, looking at this, then how does it benefit to the non-Muslim? So we can look into this Sharia listing from commercial standpoint. You look at this as a value-based proposition, just like when you look into ESG. When you look into ESG, because of your value base. So in fact, there is already a development in ESG. If your company is ESG compliant, some of the research analysts, when they do research on you and they try to attach target pricing for your company, some of the analysts, they look into the ESG premium. So if your company is ESG compliant, they put the ESG premium, your target pricing of your stock is better than non-ESG. So we are actually, in Islamic sense, we are also doing that. For example, on the sukuk, if you have a higher coverage on sukuk, your cost of financing is slightly lower than the conventional. If you have a more Islamic values, your target price can be better because the inherent nature of the screening. For example, you are more disciplined in your capital structure. Your debt to equity leverage should be below 30%. You're more disciplined from that perspective. So this premium from ESG, this premium from Islamic perspective would add value to you, you know. So the thing is that I want to say, because I'm from the Islamic fraternity, we see that when it comes to this value-based investing, we see that if you compare ESG and Islamic, even though its values is more subjective, you can see that ESG is more subjective, whereas the Islamic value is more objective. Why is it? Because Islamic values is from the very, very authentic reference, Quran, Hadith, and everything. Whereas ESG is from interpretation of the human. What is E, what is S, what is G? For example, the social, the S part. What is S in Malaysia may not be S in developed countries. Whereas what is Islamic in Malaysia? By right, it should be Islamic everywhere. Once is sukuk, the sukuk is Islamic everywhere. So from Islamic value standpoint, it is more objective. So even in ESG, if you go into the index, one index it is ESG compliant, the other index it is not. So that's why Islamic, as mentioned by Professor Ashab just now, is Islamic, designation, we provide the stability in terms of value recognition. So I think that's all from me, Encik Ainul. Thank you very much.
Thank you, Cik Damshal. For our audiences, I would like to reiterate that our topic today, even though we're talking about the Islamic capital market, we are not strictly Islamic centric. The value proposition applies to everyone. This is the same in terms of what we do at Halal Development Corporation. It doesn't mean that you need to be an Islamic company to have halal certification. So similarly, you do not need to be an Islamic organization to be a Sharia compliant organization. There is value proposition as mentioned by all our panel members. Looking at the time, we seem to be running out very quickly. So I would like to turn towards the questions posed by the audience. To Bursa Malaysia, what Sharia-related initiatives can we expect from Bursa Malaysia this year or next year? So sounds like this is directed to Encik Rizam.
To Bursa Malaysia or SE? Okay.
Oh, sorry. Your SE. My apologies.
Right. Okay.
Perhaps. Okay. Maybe we can send an email to this question, email answer. I'll move on to the next question. For the PLCs, the monitoring or screening on Sharia compliance status is being done twice a year, i.e. the list will be announced on May and November. Therefore, how to monitor the Sharia status for halal SMEs? Would it be the same way like SAC monitor the PLCs, i.e. twice a year? Maybe Cik Rizam, would you like to take this question?
I believe that that question is on Halal company. I'm not sure. Probably, I'm not sure if you have any, any feedback. As I explained before, this for Sharia compliant securities, we are clear in terms of our annual assessment, where we publish the list, which is in May and November. But I'm not sure whether that can, the same can be applied to the MSMEs in doing halal. I'm not sure about, about that.
Yeah, for the unlisted MSMEs, if you are looking to go towards listing, the Sharia Screening Assessment Toolkit is something that you can adopt for your, perhaps, in consultation with your Sharia advisor. In terms of timing, I suppose there is no set requirement for you to do it at certain times of the year. You can do continuous monitoring if you would like. It is only when you become a PLC that the Sharia screening methodology itself has a proper timing.
I know, if I may, just to add a bit, maybe on the the toolkit is very important, not only when you want to go listing, but when you want to get financing from Sharia, from Islamic banks, from any Islamic financial institution. You can do your own assessment, because Islamic financial institution, they will only finance Sharia compliant companies. So this is very important, so that you do your own assessment before you go and talk to the Islamic financial institution. If you look at your assessment, there are some gap, then you can strengthen and you can fill that gap before you go and discuss with the Islamic financial institution. And of course, whether it should be done once a year, or because the base principle is that the calculation is made based on your audited report. So at least you need to do that once a year, based on your financial audited report. But you need to make sure that all the way during that particular year, you are also Sharia compliant in general.
Yeah. I add a bit. I think if that question related to that toolkit, yes, I agree totally with Prof. Ashraf, where you can use that toolkit as a guidance in terms of how you want to, make sure that you do assessment whether you are Sharia compliant or not. Is actually up to you. At minimum, it's best if you can actually follow the same process. As long as you have the annual audited account, then you can actually check as and when in terms of whether you are complying or not. So yeah, so that's my suggestion.
Okay, thank you very much. Unfortunately, looking at the time, we have come to the end of our allotted time. I would like to thank our panel speakers, Professor Dr. Ashraf Mat Hashim, Encik Rizaham Zaidi, and Encik Muhammad Damshal for participating in this panel discussion. With that, I would like to turn this session over to Ms. Fatima.
Thank you to Encik Damshal, Encik Rizham, Professor Dr. Ashraf, and Encik Ainul for the robust conversation we just had. We hope to hear many more of insights in the future. Now, we will hear a presentation on introduction to the listing process by Ms. Lim Sume, Executive Vice President, Listing Development, Origination and Listing, Bursa Malaysia. Ms. Lim Sume was appointed by Bursa Malaysia Berhad as Executive Vice President, Listing Development back in June 2019. She is responsible to develop and promote both primary and secondary listings and fundraising activities on Bursa Malaysia, as well as on the Labuan International Financial Exchange. Prior to joining Bursa Malaysia, She was heading the investment banking department at MUFG Bank Malaysia Berhad, where she was responsible to help the bank to diversify and grow its business in investment banking via debt capital markets products, securitization, project finance, export credit agency financing solutions, as well as identifying opportunities of mergers and acquisitions targets to buy-side investors from Japan. With this, I will pass the session over to Ms. Lim Sumi.
Thank you so much, Fatima. Yang berusaha, Encik Hairul Arifin Sahari, Chief Executive Officer, Halal Development Corporation Berhad, distinguished panel of speakers, ladies and gentlemen, Salam Sejahtera and a very good afternoon and a good morning to some of the participants who join us from abroad. First of all, I would like to express our utmost thanks to everyone who are here today to join us for Invest Shariah Industry Dialogue Series 2022, starting with today's Series 1, Empowering the Halal Industry in the Islamic Capital Market, for us to share with companies in the halal industry on the value proposition of raising funds in the capital market through listing on Bursa Malaysia. Having your company listed on Bursa Malaysia is not just about achieving a market price for your company's shares or having the privilege of owning a public company, but far more importantly, it provides your company the ability to raise capital through the equity market, thus providing essentially an alternative avenue for companies to fund activities and future expansion plans, especially at a time when funding has become not so readily available. Ladies and gentlemen, this event is a timely initiative, especially for small and mid-tier companies to grow their businesses. The aim is to help prepare and shape companies for successful capital raising exercise. Being listed on the capital market presents vast opportunities for business growth, both locally and globally, hence attracting funds from both domestic and international front as well. For many fast-growing private companies, an IPO will not only raise the capital needed to fund and accelerate growth, but it is also to attain market leadership with greater visibility and enhanced credibility. With 3 listing platforms available on the exchange, namely the main, ACE, and lead markets, Bursa Malaysia offers avenues for companies of all sizes at different stages of their business life cycle to raise capital. As the national exchange for Malaysia, we strive to be your trusted growth partner by continuously playing an active role to ensure the right balance between investors' protection and creating an attractive funding platform that can help to unlock your company's competitive potential. So during this session, we at Bursa Malaysia hope to demonstrate the benefits of listing to potential IPO candidates such as yourselves. Of course, there are rules and regulations that need to be complied with in order to become a listed entity, as you are seeking public funds and would need to be able to fulfill regulatory requirements before being admitted for listing on the exchange. So during the course of this presentation, I will run through some of these rules and regulations. The other thing is collaboration. Collaboration is key to success. And those of you who hopefully will choose to list your company will quickly come to realize that a listing exercise involves many different parties, such as investment banks, other advisors, reporting accountants, legal counsel valuers, investors relations practitioners, to name a few. So do get a right team to help you get your IPO across the line. With this, please allow me to share some slides that we have prepared for you. If we can go to the next slide, just a very quick overview of who we are, Bursa Malaysia. So we started back in 1960 as the Malayan Stock Exchange and began public trading of shares. In 1986, we have launched KLCI Composite Index, KLCI, currently known as the FBM KLCI. Back in 2004, we demutualized KLSC and renamed ourselves to Bursa Malaysia Berhad. And in 2005, we, Bursa Malaysia Berhad, also sought listing on the main market. So in relation to the business pillars, we have four business pillars, as you can see from the diagram. Under the first pillar, this is where the company that the IPOs will come under the securities market. If you can see from this particular pillar, a total of 952 companies have been listed across the three market, namely the main, ACE, and LEAP. Other than the IPOs or company that has seek listing on the exchange, we also have other investable assets that are available for the investors as well, namely the REITs, ETFs, structured warrants. Other than the securities market, the exchange also actively look at building our business in the derivative space. And in the third column, under the Islamic business pillar, this is a very important pillar to the exchange, as we seek to support and complement Malaysia as the international Islamic finance hub globally. So under Bursa Malaysia I, if you can see, out of the company that has been listed, 756 or 80% of the company that has been listed on Bursa Malaysia also comply with the Sharia requirements. And last but not least, under the fourth column, as the exchange, we do offer fixed income offerings as well. And this is where company that has been listed, they are eligible to actually raise fixed income to be listed and quoted on the exchange under the Exchange Traded Bonds and Sukuk platform, or ETBS platform, both for trading and listing purposes. For companies that seek listing of the instruments for profiling purposes, there are two avenues. They can list the fixed income instruments either under the exempt regime for mostly ringgit denominated instruments, or foreign currency instrument under the LFX. Next slide. As a fully integrated exchange, we offer diverse products, as what I've explained earlier, as well as a full range of services, ranging from listing, clearing and settlement, depository, offshore listing instruments, Sharia-compliant commodity trading platform BSAS, which not only support capital market, but also offer the avenue to support commodity finance offerings by the banking or financial institutions as well. And last but not least, also in relation to the market data business. Moving on to next slide. I would like to share with you the IPO market highlight for year 2021 up to first quarter of this year. If you look at this chart on the left-hand side, back in 2021 last year, we recorded 30 IPOs, 7 of which come from the main board, 11 A's and 12 LEAP. And by 31st of March this year, the first quarter of this year, we have already seen 5 IPOs that has been listed, 2 from main, 2 A's and 1 LEAP. Out of this, the amount that has been raised from the market is 2.75 billion for 2021, 1.52 up to first quarter of this year. And in total, if you can look at the market capitalization at IPO, we have already achieved around 15 billion since last year. But do bear in mind that that is the market value at the IPO stage. Many companies have appreciated in value since listing, for example, CTOS Digital and FarmFresh. So in terms of additional market value, it's probably significantly more than 2.5 billion or 2.5 billion recorded at their respective IPOs. Of course, last year, we have seen the largest IPO for 2021, which is CTOS Digital. This year, up till 31st March, the largest IPO that has been recorded so far is FarmFresh. In terms of oversubscription rate, you can see that 5 of the A's listings since last year saw themselves recording an astounding oversubscription rate of more than 100 times, which show proof of strong investors' confidence in those companies as well as Bursa Malaysia. Next slide shows the vibrancy of the IPO. And in these slides, sorry, it may be a bit small, but under the last two columns, you can actually see the oversubscription rate as well as the year-to-date performance. Many of these companies are still recording a premium to their IPO price since listing date. So therefore, especially in today's session, I believe our IPO pipeline in Malaysia will continue to grow whilst enabling potential companies such as yourself to leverage and embark on the journey to listing. If we may move to the next slide on the sector composition. This slide shows you a snapshot of the recent IPOs that came to market since year 2021. Next slide, sorry. Yes. So it demonstrates the diversity of our exchange. If you look at the blue quadrant, most of the companies, the bulk of the companies are still in the industrial products and services. But what's more important, taken from this slide, is the 20% of 2021 IPOs, which is the orange quadrant. These are from the tech-based companies. Clearly, this demonstrates the direction of our market. Today, our economy is far more diversified as compared to 40, 50 years ago, which predominantly made up of tin, rubber, and plantation companies. And naturally, this diversity is reflected in the composition of companies that has come on listing on Bursa Malaysia. So with the arrival of the homegrown unicorns, we anticipate more and more players from the tech-based companies to tap on the market as well. If we may move on to the next slide. This slide shows the valuation or the average price to earning multiples of companies that has come on board since 2021 across the various sectors. So of course, you do note that not all companies are valued based on price earning multiples. Banks and FIs or financial institutions are valued based on price to book, while property companies are typically valued based on asset value. But price earning is most relevant to manufacturing companies, and hence why this slide may be more relevant to today's audience. If we may move on to the next slide. This slide shows the dual listing options, and though Bursa Malaysia's are open for homegrown companies or Malaysian-based company to be listed, Bursa actually do welcome foreign companies to seek listing on our exchange as well. Foreign companies have two options. Either they can come to seek primary listing on either main or A's market, or they can actually seek secondary listing on Bursa Malaysia on the main market itself. So for companies that actually have businesses in their home country, as well as if they have the intention to start their business operation in Malaysia, listing the entity in Malaysia is possible to help the company to raise the funds needed for the operations in Malaysia. And similarly, for companies, homegrown companies in Malaysia, if you do have business operation in Malaysia, as well as business abroad, seeking listing on two exchanges is possible as well. And basically, you may not need to actually opt for one market, but can actually seek listing on two exchanges during your IPO. So if I may just share a quick case studies on OM Holdings. OM Holdings is actually a company that has been listed on the ASX, And last year, on June 2021, it has actually sought the secondary listing on Bursa Malaysia. And you can look at the graph. OM Holdings were able to unlock better value with greater access to a larger base of Malaysian investors. At IPO back in 2021, only 16.8 million shares were made available for trading on Bursa Malaysia. However, subsequently, due to the improved liquidity in the shares, OM Holdings have actually increased the total number of shares to be traded on Bursa Malaysia. So as of 15 February 2022, 102.7 million OM holding shares, or approximately 14% of their share capital, are now listed on Bursa Malaysia. So if we may move on to the considerations to go listing. Next slide. This slide looks familiar as it has been shared by Encik Rizam earlier. We borrowed this slide from the Capital Market Master Plan 3. And if you look at this slide, as what I've mentioned, Bursa Malaysia have three markets, being LEAP, ACE, and main market, which enables the companies at various stages from growth, late or matured stage to come on board for listing. So next slide, why list? Now, I've earlier touched on various things, including access to capital as our first item, but I also want to add a few thoughts. Being listed not only provides access to capital, but at the same time, it creates a currency and shares have a value. It facilitates growth and the ability to issue shares or currency that helps you to acquire more businesses without raising money. Of course, this may dilute existing shareholders' interest as the shares are issued to new owners, but this is where your appointed advisors will have to assist you on the structuring and the economics. What's more important to note that it gives you an alternative means to pay for things. Credibility is also essential, especially at time when environmental, social, and governance, or ESG, has become the new buzzword. Funds today, and not just global funds or foreign funds, but our domestic funds, the likes of the EPF, QUAP, and other mutual funds as well, make it an absolute requirement that their money is placed in companies that practice ESG. So ESG is the key. Profile and visibility, that's obvious. Once you are listed, you'll be all over the news. And of course, your share prices are also quoted daily in media and various other channels and avenues as well. So it will help to elevate the visibility of the company. Incentives for employees through ESOPs or stock options. This is an amazing way to incentivize your staff and aligns them to meet your objectives. Everyone becomes owners of the company, and this sense of ownership translates to a common goal to succeed and loyalty. Which brings me to shareholder or investor spread, or more importantly, liquidity. Public companies that are not just profitable, but well-run, attracts money and interest among the investing community. And this is where it will translate to the liquidity of the shares. Moving on to the next slide on our marketplace. In relation to the regulatory landscape. So there's us, Bursa Malaysia, and there's also the Securities Commission that regulates Bursa Malaysia. This is very similar to Bank Negara that regulates the banks. End of the day, when it comes to money, it's usually regulated. So point to note here, Bursa Malaysia are the approving authority for both ACE and LEAP markets. We became the ACE One-Stop Center effective 1st of January this year, 2022, where we become the sole approving authority for ACE market IPOs. For main market IPOs, it is under the Securities Commission purview, and it would include the RTOs, reverse takeovers, and secondary listing of foreign corporations that I've explained earlier. Your prospectus must also be registered with the SC, be it for the public offerings or the subsequent fundraising, for example, rights issue. Next slide. On the listing segments, we have three main markets, as I've mentioned before this. The main market are meant for the prime market for listing of established companies. The ACE market are what we call the sponsor-driven alternative market for companies with growth prospects. And lead market are essentially the advisor-driven market for sophisticated investors only. So if I may share the listing introduction, some of the rules and regulations governing the three market. So following from the previous slide, the three markets obviously have different requirements in who is the approving authority, which we touched on earlier. But in terms of documentation and level of disclosure and etc., what goes into your offering documents is a bit different, as it caters for companies at different levels of maturity. So this shows you who is allowed to advise or sponsor you, and of course the overall admission criteria. So let's focus on the key admission criteria at the bottom. Under the main market column, there are three rules for the company to be admitted. So you can either be profitable with not less than 20 million in uninterrupted profits over 3 to 5 years, and achieving not less than 6 million profit after tax in your last financial year. However, if the companies are not able to meet this profit test requirement, there is also a market capitalization test requirement. This is where your company may not be profitable, as what I've mentioned, but you already have more than a year's operating revenue, and you are able to clearly demonstrate future earnings. But more importantly, your company's market value should be more than 500 million. There's also what we call the Infrastructure Project Corporation, the IPC rules. Again, this is designed primarily for concession-based businesses, be it independent power plants, for example, where you have an off-taker agreement in place for a minimum of 15 years, and your project cost is more than 500 million. So under the ACE and lead market column, there is no minimum profit or operational income requirement needed. However, this is the hard part. You must be able to demonstrate potential. And this is where you have to be able to clearly articulate your business growth prospects and your future earnings potential, guided by your chosen advisor or the sponsor. Moving on to core business. This is straightforward. Obviously, company that comes for listing, you must already have an identifiable core business, and you can't be purely owning investments in other listed companies, making you purely an investment holding company. On the IPO routes or the IPO options, conventional here means companies that come to list their ordinary shares. And this is probably where most of you are. Your company grows to extent you can qualify for listing and you apply to list. But I would also like to quickly touch on the other available options. First is SPAC, Special Purpose Acquisition Company. Now, we have not seen many SPACs in recent years, but back in circa of around 2009, Securities Commission had already issued the framework for this type of IPO. And if I'm not mistaken, there are 5 companies that have applied, but only 2 companies that made it across the line. Late last year, SC has further revised this SPAC framework to encourage professionals with extensive experience in the private equity or the venture capital fraternities with asset sourcing and deal making experience to steer SPACs going forward. So SPACs are special purpose acquisition companies, like what I've explained, that are established to raise not less than 100 million from the public market. The deal is the promoters of the company must be able to demonstrate their capability and expertise in a given field to raise money through the IPO process with the promise that the funds will be deployed to acquiring suitable assets. They are given 2 to 3 years to achieve this, and if not, money goes back to the investors and the listing is cancelled. The other alternative route is REITs, Real Estate Investment Trust. Typically, this IPO route is based on a trust structure, not a company. So instead of shareholders, owners hold units in the trust. But in essence, it is run by a management company that is employed by the trust. So next slide. Sorry. Okay, so I will touch a bit on the fees. In relation, in essence, the larger the company and the more that the company intends to raise, then obviously the fees payable will be more as well. So on this slide, on the qualitative criteria, so what I've explained earlier on are more on the quantitative side. On the qualitative criteria, it's equally important. A company that comes on listing or IPO must not undermine public interest. Basically, there should be no impact on religious sensitivity, morality, ethics, etc. Conflicts of interest must be addressed at the onset and mitigated satisfactorily. And this would include the conflict of interest between the substantial shareholders and the directors, as well as possible conflict of interest involving the advisors. So for example, if the businesses, if the shareholders or the directors have a few companies doing the same type of businesses, when they list the company, they should amalgamate all these similar business together as a group to seek listing, so that there's no potential conflict of interest that may arise after the listing of the company. So the next one is on corporate governance. Past corporate conduct of the company and its group of companies, as well as the promoters, directors, and key management need to be looked at. Next slide on the common pitfalls. So here are just to share on some of the common pitfalls and the areas that the company should need to address early with your chosen advisor. As what I've mentioned, there's conflict of interest and related party transactions that need to be resolved at the onset. Companies would also need to ensure that they have all the valid licenses, permits, approvals for the businesses or the properties when they prepare for the company to come on listing. The arrangements that affects the operations, for example, shareholders arrangements, your suppliers contracts, customers contract must also be properly documented. One of the things that the company should also pay attention to is in terms of the auditors. The smaller companies at this moment may have their appointed auditor, but in terms of the accounts preparation, it may actually be under a different standard, which is what we call the Malaysian Private Equity Reporting Standards. However, if the company wish to come for listing, one thing to note is the auditor ought to be from the list of Audit Oversight Board, AOB registered firms. And these companies are actually listed on the Securities Commission website. And these auditors will help the company to prepare the accounts in accordance to the MFRS standards instead. Last but not least is in relation to the future plans. companies that come for listing should be able to demonstrate their future plans, but these plans must not be unrealistic. It must be achievable and scalable at some point in time. So what we advise is for the company to resolve issues as what are listed above at a very early stage. Inform your advisors on all the issues faced, and they should be able to help you resolve and structure the IPO deal. Or you may actually consult Bursa. We provide guidance on listing processes and assist in preliminary suitability assessment as well. If we moved on to the next slide, just to share on the listing timeline for the three market. Based on this particular diagram, as you can see clearly, we can actually segregate the entire listing process into three stages: the pre-submission stage, regulatory approval, as well as the post-approval. If you prepare the company well for listing, the timeline that is taken from end-to-end process can be as short as 9 months. But normally it will take about 12 months process as well. So if I can just share with you the normal process for main and ACE market, under the pre-submission stage, this is where the company appoint the right team, as I've mentioned earlier on, appoint the advisors and other experts to help you in the structuring of the IPO exercise. Due diligence will happen at this stage as well. And the due diligence will cover from financial, legal, operation, and internal controls, and preparation of the submission of documents meant for the application to authorities will happen under the pre-submission stage. And moving on to the regulatory approval, there is a mandatory pre-submission consultation that is required with both SC and Bursa respectively for main and ACE market. And once mandatory consultation session happens, the submission of the application to the respective authorities will take place, and this will include the prospectus as well. And to add on the layer of the submission to the SAC, the Sharia Advisory Council, to ensure or to actually obtain the approval for the counter to be listed as a Sharia counter or Sharia IPO counter as well. So the review process by the authority will take place within these 3 to 6 months. And under the review process, it may be inquiry from the respective regulatory authorities, or site visits may be arranged during this stage. And the decision or the approval from the SC and the SAC will happen at the end of this stage. So after the approval has been obtained, that is where your advisor or your appointed book runner will help you to market or distribute the IPO. They will secure the places or the cornerstone investors. They will do the book building or the roadshow exercise to sell the shares of your company. The lodgement of the registration of prospectus will happen here as well. And the underwriting, as well as the public balloting, all the way up to listing. This will be under the post-approval process. For the lead market, because it is designed to be a light touch in terms of rule, you can see that in terms of the listing timeline, it is relatively shorter. It can actually range from, probably 6 to 8 months. So yeah, if I can move on to the next slide, just to share on some recent developments and updates on the IPO front. Next slide. Okay, So on this, as I've also mentioned earlier, Bursa became the ACE one-stop center this year. So what we meant by that is the application will come to Bursa. The registration of the prospectus will be undertaken by Bursa as well. And for ACE companies that want to raise secondary fundraising subsequent to the IPO, the abridged prospectus registration will fall under the purview of. Number two is on the revision of the SPAC framework. I will not go through this as I've briefly mentioned earlier on. So this revision of SPAC framework also came into effect 1st of January 2022. Next slide. On the amendments to the CMSA to widen the categories of sophisticated investors, with the widening of the definition of sophisticated investors, it has actually helped to also widen the investor category for the lead market. So for individuals with investments of 1 million in the capital market products, either on their own or through their joint accounts with their spouse, or if they are holding a position as a CEO of a licensed or registered person under the CMSA, they are now categorized, they can be now categorized as sophisticated investors under the CMSA Act. Number 4, in relation to the reduction in public spread, this is something that the exchange has done last year, where we will consider application to allow company that meets market capitalization criteria with good reasons and justification to lower the public spread from the required 25%. And this will be assessed on case-to-case basis. The next slide, what we want to share is in terms of the tax deduction that is available for eligible technology-based companies. So for those technology-based companies out there who are listening today, if you have already planned for an IPO, do consider to catch this window, because if this is actually the last year of assessment 2022, where for your company there is actually a tax deduction up to 1.5 million that is allowed for deduction, and these are in relation to, for example, fees to the authorities in relation to the IPO, the professional fees that you have spent for the IPO, or the underwriting, placement, and brokerage fees. The last one is on the requirement on the appointment of at least one female director. This is actually announced under Budget 2022, where the government has actually made it mandatory for all public listed companies to have at least one woman director on board. All large companies must comply with this requirement by September 2022, and all other listed companies, you need to comply with this requirement by January 2023. So with this, it has come to the end of my sharing today. Please do not hesitate to reach out to our marketing, IPO marketing team. At Bursa Malaysia, we offer free consultation and guidance on the listing process. We are here to assist you, and my team members are also present today to answer any of the questions that you may have with regards to listing, and wherever we can, recommend appropriate solutions on issues that you may encounter or anticipate, regardless of what mode of funding that best suit your needs. It is our ultimate goal to see you succeed and become part of Bursa Malaysia family at some point in time. So thank you, and Ramadan Kareem to all of you who are celebrating. So back to you, to
Ms. Fatima. Thank you.
Thank you.
Thank you, Ms. Lim Sumei, for the insightful presentation. We hope the presentation will be beneficial to the fellow participants. Before we end our today's session, let us now welcome Encik Harul Arifin Sahari, Chief Executive Officer, Halal Development Corporation, for his closing remarks.
Yang berbahagia Prof. Dr. Ashraf Hashim, Chairman of Syariah Committee Bursa Malaysia Berhad, Encik Muhammad Damsyal Awang Damit, Chief Investment Officer, Lembaga Tabung Haji, Encik Rizam Zaidi Rizwan, Deputy General Manager, Islamic Capital Market Development, Securities Commission Malaysia, speakers and distinguished delegates, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera and a very good afternoon. It has been an interesting Invest Shariah Industry Dialogue 2022 for all of us. Our gratitude to our organizer, Bursa Malaysia, and for the support for the Securities Commission Malaysia. And I would also like to thank our panelists and speakers for the insights, the perspectives, experience, and for the knowledge that they have shared with us. The chosen theme of empowering the halal industry in Islamic capital market is apt and timely as Malaysia had emerged as the #1 nation for 9 consecutive years that supports the multi-trillion-dollar global Islamic economy in addressing the growing Islamic economy opportunity, the dinar standard in its State of the Global Islamic Economy Report 2022. Malaysia now enjoys a mature Islamic finance ecosystem with resilient players, advantageous market size, diverse demographics within a comprehensive infrastructure. And with the halal economy and the Islamic capital market being natural economic partners, halal players should be a major component of the capital market. Our over 1.1 million micro, small and medium-sized enterprises or MSMEs have always been one key driving factor for our halal economy as well as an integral part of the Malaysian economy, contributing to the 8.9% or more than 500 billion ringgit to our gross domestic products or GDP. They form 97.2% of the total number of business establishments in Malaysia, employing close to 70% of the country's workforce. While there are available government stimulus package and in the budget 2022 for this group, it may not be enough as that this is a funding of budget in a pandemic. And to grow their respective sectors, they need to look beyond these fundraising activities. To its credit, Malaysia had also diversified in its market-based funding avenues by developing its Islamic Capital Market or ICM with commendable progress, expanding from 294 billion ringgit as at December 2000 to 2,256.4 billion ringgit, a 65.9% of the entire domestic capital market as end December 2020. And in this recovery economic post-pandemic, raising funds through listing on Bursa Malaysia presents an alternative fundraising that will also increase the number of listed Sharia-compliant companies. Ladies and gentlemen, Malaysia as the leading global Islamic economy indicator has a long-standing journey of halal dating from 1974, and through the Halal Industry Master Plan 2030, Malaysia is aiming to be the global halal center. The sizable market for halal products catering to 1.9 billion Muslims in the world, which accounts for 24% of the global population, will be further increased by non-Muslim practitioners. PEW Research Center had highlighted that the number of Muslims worldwide is expected to increase by 75% to 2.8 billion in 2050. And of equal significance in the breadth of the halal products and services made available to the commercial sector, no longer confined to food and food-related products, but rather to include pharmaceuticals, cosmetics, healthcare products, toiletries and medical devices, as well as service sector components such as logistics, marketing, print and electronic media, packaging, branding, and financing. HDC is expecting the global halal economic growth of 3.1% in terms of compounded annual growth rate, or CAGR, for the next 5 years, with the halal industry projected to reach USD 3.1 trillion by 2024. The global halal market is expected to grow to USD 5 trillion by 2030, while domestic growth is expected to reach USD 113.2 billion from the USD 68.4 billion in 2018. With our existing comprehensive halal ecosystem, now is the time for halal players to capitalize on Islamic capital market to ride on this expected growth. Ladies and gentlemen, halal industry is expanding fast and becoming the new market paradigm with its own unique set of challenges and opportunities. And in Malaysia's drive towards a global halal market, halal center or marketplace, the Islamic capital market is well suited to further unlock the potential of the halal economy, providing a comprehensive end-to-end Sharia-compliant ecosystem for emerging businesses in the halal economy. As at November 2021, there are 751 Sharia-compliant securities from the various sectors listed on Bursa Malaysia, making up 79% of the total 948. Halal industry is now the engine of economic growth in the 12th Malaysia Plan, expected to contribute 8.1% to the country's GDP and generate 56 billion ringgit export revenue in 2025 compared to 30.6 billion ringgit in 2020. This would be strengthened to produce competitive domestic halal industry players in capturing a bigger global halal market share. Against this backdrop, the halal economy holds excellent potential locally and globally, with plentiful opportunities for MSMEs to play a greater role to develop, progress, and sustain their business in global halal market, complemented by ICM to improve as well as expand their businesses. Fundraising through listing on Bursa Malaysia will empower these entrepreneurs to seriously benchmarking with other successful companies for improving their businesses and services. In the long term, it will also provide the necessary discipline to better manage their cash flows and finances. Integrating halal industries with ICM should not be deemed separately, as they are under the same umbrella of Sharia, and the collaboration of the industry can lead to a harmonious system that can support each other. The Islamic financial system through Islamic banking and capital market instruments will channel their long-term funding to other halal industry, especially as more sectors enter the halal space. A listing status provides good company profiling, as they are more visible and recognizable as compared to other companies. It improves investors' confidence, as the share price publicly arrived at on the basis of demand and supply, generally reflective of the real value of the security. Ultimately, it can attract new customers and market. And with Malaysia's strong Islamic finance footprint, HDC will work with halal players, notably the MSMEs, to allow them to drive the respective halal sectors and in turn empower the halal industry to fortify ICM's growth. HDC had over the years worked tirelessly on building a comprehensive halal infrastructure to support the nation's halal economy for both existing and potential halal players as well as consumers. This is in fact the first HDC's collaboration with Bursa Malaysia, and we look forward for many more partnerships in the future. We hope that at the end of this engagement, there would be more halal micro, small and medium-sized enterprises, including ICM, as part of their business operations. This will put the halal eco-infrastructure on a stronger footing and at the same time to grow the halal industry both locally and globally. And to conclude, it is my sincere hope that the participants that are here today use the opportunity to attain and the required details on the benefits of the Islamic capital market, and in turn empower themselves to pave the way for concrete action on this new and important alternative funding front. Thank you, and I sincerely hope that everyone has had a good engaging session. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi taala wabarakatuh.
With that, marks the end of Invest Shariah Industry Dialogue 2022 Series 1. For those who wish to watch this session again, you may watch the session recording at www.bursamalaysia.com. On behalf of the organizers, Bursa Malaysia, Securities Commission Malaysia, and Halal Development Corporation Berhad, we would like to thank all of our speakers for sharing with us their invaluable insights. Subhanakallahumma bihamdika ashhadu an la ilaha illa ant astaghfiruka wa atubu ilayk. That I shall end the session with Assalamu alaikum wa rahmatullahi wa barakatuh and Ramadan Mubarak to you all.